You're one of the people that has written the most about money supply.
Yeah.
And you think that it's the most underappreciated factor in what drives everything.
Yeah.
And not a lot of people seem to talk about it.
Yeah. So this is a chart of year over year. So, December over the previous December growth in M2.
This is the not the level, the growth of it.
Growth rate of M2.
So what is the average growth rate of the money supply back 60 years?
If you go from 1960 to today, I'm going to tell you the average
Five-ish?
5, 6, 7, somewhere right in there.
Okay, and 3 years ago it hit 30?
Look at that. Yeah. I mean, whenever I look at this chart, I always go, which one of these is not like the others? All right.
Did we correct enough? Or
well, that's where the inflation came from. It's really clear. I mean, it was one of the easiest forecasts I ever made. But what the Fed has done since Bernanke took over is they started doing QE, so they were buying trillions of dollars worth of bonds
from the banks,
flooding all that money into the banks. And then what they did is the Fed went there and said, hey, guess what, Citi, JP, Bank of America, you have to hold more capital. You can't, and in other words, they made them hold the cash and not start lending it out. And so they made increased liquidity rules. Jamie Dimon complains about this all the time. He goes,